Hello and welcome to our ACCA P7 Advanced Audit and Assurance lecture recaps. This is lecture 10 and it was on evidence. Okay, the first ISA we looked at was ISA 500 audit evidence. So what evidence do we need to gather? We need to gather sufficient appropriate evidence to draw a reasonable conclusion on which to base the audit opinion. That's the evidence we need, sufficient and appropriate to draw reasonable conclusions on which to base the audit opinion. A little bit about the quality and reliability of different types of evidence. Independent or external evidence is better than internal evidence. Effective controls will increase the reliability of evidence. Auditor-generated evidence is very reliable. Documentary evidence, well, original documents are best, and it's better than oral evidence. Gathering evidence then. What are the objectives? Well, we want to understand the entity. Remember, we have a requirement to have a knowledge of the business, understand the entity. We want to assess the effectiveness of controls within the business, and we want to detect any misstatements that there may be. Procedures to do this: inspection of documents, observation, external confirmation, recalculation, reperformance, analytical procedures, and inquiry. Learn those procedures. Those are the procedures by which you gather audit evidence. Analytical procedures then under ISA 520. What are they? Well, it's analysis of trends and expectations, expected ratios. You want to investigate any differences, fluctuations, things you weren't expecting, and they must corroborate other evidence. When do you use them? Well, it's compulsory to use them, first of all, at the planning or risk assessment stage. Remember though that the planning will be carried out probably prior to the year end, so you may not have full year accounts on which to undertake your analytical review. So you'll be using maybe draft or projected figures, so just remember the limitations in using those. They're also compulsory at the review stage of the audit. So under ISA 520, analytical procedures compulsory at the planning stage and the review stage. You can also use them as a substantive test at any time during the audit, but this is not compulsory. Okay, so that's ISA 520 analytical procedures. Management representations then, ISA 580. Written representations, that's ISA 580. Okay, remember that management representations provide low reliability because the management have a vested interest. You only use them if you've no other evidence. And why get them? Well, you want management to know their responsibilities and accept their responsibilities, to say that they have approved the financial statements, to say that there are controls in place, and that the misstatements are immaterial, or any misstatements in the accounts are immaterial. The Clarity Project then gives us an additional couple of things. We've got to say that the auditor has received all information in the management representations and that all transactions have been recorded. These should be included in the management representation letter. Clarity Project also says that you can issue a disclaimer of opinion if the integrity of management is doubted or if the representations are not given. So that was ISA 580 management representations. On to ISA 620, using the work of an expert. Expert advice might be sought for evaluation or for maybe some complex areas of the audit. Remember though that responsibility lies with the auditors. It is the auditor's opinion, so they can't give the expert's opinion and say that they disclaim their own opinion. They have to rely on the expert's opinion, but at the end of the day the audit opinion is the auditor's. So what we've got to consider is the competence and objectivity of the expert. Have they had adequate scope? Have they gathered appropriate evidence? And the Clarity Project says that before using an expert we have to agree in writing with them, first of all, the nature, scope and objectives of the work, the roles and responsibilities, the communication between the two parties, and that the information must be kept confidential. Other considerations are the consistency of the evidence. Does it support the other evidence that you have? Significant assumptions made by the expert, and the accuracy of the source data that they use. Remember that there's no reference to the expert's work in your audit report. On then to relying on internal audit. This is under ACCA 610. Under ACCA 610 you've got to understand the activities of internal audit. That will be the status that they have within the firm. Are they going to be listened to? Have they got sufficient status? What scope have they got across the firm? Have they got competence? Are they sufficiently qualified? Have they exercised due professional care? So you have got to take these all into account when understanding the activities of internal audit. You'll then evaluate their work. You'll see if they've had sufficient training. Has there been sufficient supervision and review? i.e., is it of sufficient quality? And has sufficient and appropriate evidence been gathered to support the conclusions that they have made? If there are any exceptional matters, well then you may have to conduct your own audit work rather than relying on internal audit. Other matters then surrounding evidence. Documentary evidence is under ACCA 230. You have to have timely preparation of all documents, and another auditor should be able to re-perform the tests that you have done by looking at the working papers that you have and re-performing the tests. Under related parties, who are related parties? They're those who are related to those in control, or managers, or those who are actually in control, indirectly or directly. Anyone who's related to managers, or anyone who's under the control of the entity, such as associates, joint ventures, subsidiaries, or maybe pension schemes. So anyone who is under control of the entity, such as subsidiaries, associates, joint ventures, or pension schemes, are related parties. Procedures under ACCA 550 to identify related parties. Review the procedures in the firm to identify related parties. Inquire with management. Review the prior period work. Check the shareholder records. Check records and minutes. Ask the other auditors if there are any, and review the tax returns to see if you can identify other parties. And that is all under ACCA 550 related party transactions. And that was our lecture on audit evidence.